Hi, welcome to the Market Alert for Thursday, the 20th of November 2014. Just before we get started, I would just like to inform you that tomorrow there won't be a Market Alert. I won't be here, but normal service will resume over the weekend, and I say back to normal all of next week as well. So just tomorrow there won't be any Market Alert. Mind you, given how quiet the markets are at the moment, we're not missing too much anyway. So yesterday we see the market trading through the psychological level here. You can see the pre-market fairly quiet, the market sitting on the 17,650, the market going through this, and then trading all the way down to the support one there. So there you can see the market trying to hold above the 17,650. The market coming through the close of the previous day, trading back up to it, then through the 17,650, testing along the way, but eventually then finding some support down at the S1 and the previous day's low. And you can see how the market pulled straight back through the previous day's low there. The rest of the session was quiet, of course, because Yellen was going to be speaking at 7 p.m. You can see here when she actually spoke. This buy signal has appeared on the chart following a reload this morning, but it wasn't there yesterday evening, and had it have been, it wouldn't have made any difference anyway, because there's no way you're going to be in the market 5 minutes before Yellen is speaking. So this signal appearing on the chart is quite simple. Some of the data may have been recalculated. There may have been a mistake in the market following the fast-moving part that came with the FOMC, and then once any sort of bad tick is recalculated, then it can throw up this signal on a reload. But it certainly wasn't there during the day session for me. It may have been for you, but it certainly wasn't for me. And again, that depends on what server your ETX account is linked to as well. So anyway, we see the market's reaction moving sharply higher there to begin with. And then the selling comes into the market, and we see the market being moved back down to the psychological level that we came through over here, 17,650, and then the market just finding support and just drifting back to the upside. A very lackluster response to the FOMC minutes there, which is unusual because normally the market moves higher. But if it's going to move higher, then what you generally find is that the market's marked down first, and then it moves higher. In this case, we saw the market moving to the upside to begin with, and then reversing and coming back down, finding support, and then just staying there as well. So quite a narrow range actually for the Dow yesterday, about 100 points if you look at the psychological levels here. Let's just go from the low up to the high that we had there. 89 points, so not even managing to make the 100-point range, even with an FOMC meeting. So that shows how quiet the market has become. Again, this is patently obvious when you look at the daily charts. You can see here that we've got the market stuck in a bit of a sideways range at the moment. If I just get the 0% tool and then just mark across, you can see there's that sort of trading range that the market is actually in, apart from the spike that we had there with 17,732 when we had the all-time high 2 days ago being made there. So you can see that range that we're actually stuck in at the moment. There is no volume. It's dropping off quite sharply, so there's not an awful lot of buying going on. It looks like there's a bit of selling coming into the market there. We've got 2 days there of red on a slightly higher volume, but it's nothing major, as we saw at the latter part of September there. So in the implied volatility, this increasing from 10.68 to 10.74 for yesterday, but what's good to see is the drop-off in the historical volatility there, coming down now to meet the implied volatility. This needs to cross through in order to see this market have a correction and move sharply to the downside. So you can see all the corrections in the market have come when this blue line has been below. So at the moment, expect the market to remain sideways to higher there. Right, well, that's it from me for today. Again, just to remind you, there won't be any market alert tomorrow, but a normal service will resume over the weekend. Just having one day off, not been away or anything this year, so tomorrow just one day off, so that no divorce proceedings are put into place. So I will see you over the weekend, and as ever, thanks for your support, very much appreciated, and also for watching. See you in the next one.